Okay, I think we're live.
Welcome to Technical Roundup. Today, our sponsor is Blockfolio.
Let's fucking go. Thank you very much.
That was pretty good, right?
Yeah, I mean we have a new intern now. Jealous of the CMS guys.
Yeah, I'll be waiting my 2 Bitcoin payment.
Oh shit.
It's okay. That's like $500, so it's no big deal.
Let's go.
Oh, that's low. That's low. But yeah, for real, the sponsor of the show is Blockfolio. If you want to check them out, the links to them are in the description. They still do all the stuff that you're used to, like the portfolio tracking, and you can even trade there now. So if you want to do that, check them out. Today's guest that we have, if you haven't noticed, is Salsa. Very much looking forward to this one because he's been nailing this range and he's gonna teach us how. That's my bit. Now you can ape out while I check Twitter and see if I can retweet this thing.
Hi, I'm here too. Thanks for introducing me, Don.
Oh shit, totally. Like I thought that was kind of like
the layup for it. No, don't worry about it.
Nah. I thought that was implied because it's Friday and you're always here on Friday.
I suppose that's true.
You never let me do this alone. I've begged you to do this. Like I've been like, please take a day off so I don't feel bad when I take a day off. And you've been like, nope.
And then I just capitulated entirely on live streaming. So I guess there's your payoff. Next week's going to be fun though, because we're doing the interview with Paolo of Bitfinex. So my DMs and replies just going to be like pretty passionate people telling me that we asked all those wrong and stupid questions. So that'll be a good one.
Yeah. Did you hear about that, Jules? Because
the Paolo. No, I didn't know you had Paolo as a guest coming.
Yeah, next week. So if you have anything, actually, like if you have anything that you would like us to ask him, let me know afterwards, and then.
Sure, man.
We'll see if we can make that happen.
I'm just gonna ask him for money. I mean, I don't know what your plan is.
Well, just have him print some Tether and then
into my wallet. Yes.
Sir, me family.
Yeah. Oh man.
So Tether printing, it obviously explains Bitcoin price action on the way up, and then that mechanism just disappears when the market crashes. It's very strange how that works. I'm being completely sarcastic.
Yeah, I don't know if you guys noticed their new function on the BitMEX institutional platform.
What's that?
It's called System Overload. I think it's a new. I think it's a new thing.
Dude, is it still like I've at least looked at BitMEX a couple times in the last few weeks, and it's seemed better because there's no one trading there anymore.
It's logical. Yeah, it's logical. I think every exchanges has those kind of issues, whether they shrug it under like the rug or not. But the more open interest and the more volume during volatility, the more hit they get. So you get like Binance, FTX, Bybit, all those exchanges, like they have a shit ton of volume when there's big moves. So there's like some kind of issues all the time. And I don't think a single platform with like huge derivatives volume is perfect in crypto. Far from it. But they do the job fine sometimes. Like some of them are definitely less troublesome, but there's no perfect world yet, in my opinion.
Yeah, I mean, I think it's in a large part anyway. Like if you look at the traditional markets, right, it took them years to figure this shit out, right? You had these times, and I mean, this has just recently changed where you could trade and go in depth for doing so, right? If you get margin called, you could go into the minus. In Europe, you can't anymore, but like you used to, right? So it's like you trade and then you get wrecked, and then they're like, okay, you owe us like 6 figures. And you're like, fuck.
You know what? On FTX, I read the terms of service, and legally, they could, in theory, like come after users if they get liquidated on, like, let's say you long a shit ton of altcoin and it nukes to zero in like one candle and you're left with a negative balance. Like they could, in like according to the terms of service, come after you, but they will never do that because like governments,
the business,
like the government's not gonna be like helpful to them when they lose money, when they don't necessarily comply everywhere. When they win money, it's all good, you know. So why would they, like, they don't have really the recourse or the vibe I get. But like, if you deposit on an account with a negative balance more funds, they'll probably use that to refund the debt, but they won't come after users. So that's the vibe. That's the kind of vibe I get, at least.
Yeah,
That was a super weird bit of like crypto Twitter trivia when we were all just trying to read the terms and conditions.
Yeah,
and
yeah.
FTUS and FTX have like different terms and conditions, and then I'm DMing this like mod who tells me that they can come after you, but they've never done it. And then Sam finally tweeted saying they won't go after their users.
Yeah.
Seeing a negative balance is just so weird in crypto because we're used to when we get liquidated, it just says zero or there's dust left.
That's the
seeing
thing,
minus
right?
is so scary.
But that's the thing. They say they won't come after you, and like 100% I believe that. But still, if you have a negative balance and you deposit more collateral, they'll use that to refund the debt. So you still have a negative balance until you pay it, right?
Yeah, I mean, there used to be the same thing happened on Bitfinex years ago. A friend of mine actually was, I think, 6 digits in the minus. And what he did was just like nuke the account, make a new one.
Yeah, I mean, that's a smart move at this point. Like, I agree with that. I mean, if they're not coming after you, and like, in theory, they have the freaking insurance fund, right? Like, they liquidate you at not necessarily the fair value, but you're supposed to be protected a little bit in exchange. And that's the vibe I get, at least from most crypto exchange, right? BitMEX has that insurance fund. I think FTX is a bit fairer, but if you can have that negative balance problem, then it's not necessarily a better system.
Yeah.
It's just different.
I mean, with FTX, the one thing that they do have is that they kind of that the liquidation engine is much more friendly than the other ones. So it doesn't really
they do it. Yeah, they don't like liquidate everything. They do it in like just liquidate, I think, what's required to keep the account afloat.
Yeah. Like they just sell. I've tried it out. I've tried it out, and
I'm just testing, bro. I'm just testing.
I've tried it out because I was curious, like a while, like that was like at least 2 years ago. And I was like, okay, what happens? Because I knew it was different. I just didn't know how. Besides like reading it, so I wanted to see how it works. Just like 100x the position basically. And what they do is they just sell slowly. Like they take some of what you have, and then they just sell. You don't get liquidated for all of it, and then if it turns around, you still have a position. But then again, this entire liquidation business, I mean, you shouldn't get liquidated in the first place.
Yeah, that's also the vibe I got. You know, it's not because I got liquidated shorting Link. It's because I read the files that they have on the exchange.
Yeah, dude, the fucking Link story is so hilarious. But yeah, generally speaking, what do you think of the market right now? I have like the Bitcoin daily chart open. If you want to share yours, I know that you don't really draw lines too much, but I mean, you can.
I see your chart. I'm on the YouTube stream right now, so
okay, yeah.
What I think of the market? Mostly yes. Yeah. I mean, I think that anybody positioning for any kind of free ride swing is probably going to suffer for the next couple months. That's my take on the market. Like, I don't see any big trend incoming. I would doubt it. Like, even if we break down, it's not going to be like an easy ride down. There's going to be bounces, and it's going to be grindy, in my opinion. Like, I don't see as much willingness to bet and like sky high open interest with like either of the sides ready to pay a big premium or a big discount for the privilege to be in a position, right? I just kind of see volumes drying up, volatility slowly drying up. And I think that the bid is kind of thick on like spot exchanges. I've seen some buyers continually kicking in around the 30K and under. So like, even if we break down, it's not going to be clean and like a straight line. I don't think so. And if we go upwards, I think that sellers will step up as well. Like, I don't really see anything exciting for swing traders, but for scalping intraday, it's been great because like $300 is 1%, and you get multiple $1,000 move per day. If you're looking at Ethereum, it's even bigger. So it's been kind of heaven on earth, and I've been doing really great past few months. But again, like, if you're the guy who just positions for the next big move, I think you're going to have a hard time in the next couple months. Just my take.
I like that. Just continue to crab, basically.
Yeah.
It's kind of my view too.
I think we've been chopping like in this range for what, 50, 60 days?
Yeah, 2 months.
We've seen the norm, like for big range Bitcoin, it's not abnormal to go like closer to 100 days. So at least another month of just chop, and maybe it dries furthermore, maybe more. I would not be surprised if there's no like big trend anytime soon.
Oh man, I mean, I think everyone hates to hear that. Besides yourself.
Like, tell you what, like if I was to take a swing trade, it would probably be on altcoins on the short side, on like a big rip. Like if Bitcoin rips up and altcoins rip up, that would be my best bet. Like I would take some altcoin that I think has some big downside, because they have more that kind of cult mentality where people get really attached and believe in them. And I know I was that guy in 2017, and it didn't turn out well for me. Okay. And generally speaking, in a bear market, altcoins have a lot more downside than Bitcoin, at least historically. And I think that most of the altcoins are trash, and that there's like huge inflows of capital that were unjustified, in the sense that, let's say you have a great idea, you fundraise a bunch of VCs or pre-sales, like you could raise multiple millions of dollars without a working product. Like all you needed was a website, an idea, and that's it. You could raise millions. So I still think that if something has more downside, it's probably altcoins. Bitcoin, like, I think it's going to be choppy mostly, no trend. So, sell rips, buy dips is kind of my take, and I just take it day by day. I try not to sleep in positions, not just for health, but because like I'm not comfortable just holding a trade with pre-rides in mind. And I know that if I have a trade, and I've experienced it past week, like I'm not going to be able to sleep well. I'm going to wake up at 4 a.m. and go check the prices because I'm too scared that the market reverses on me.
Yeah. It makes sense, even more so when you don't bet, like when you don't think the market's going to move, why sleep in position, right? You just take edge away, basically, because you can't monitor. And then you get another opportunity the next day and the day after. So it's not like you have to hold on.
If I had to like bet on an altcoin going up, like I would probably just, because I don't know if you've seen recently the Sam Trabucco tweet.
Yeah.
But he's like literally saying Alameda is obviously buying FTT right now. Like there's a dip. He's basically saying there's a dip. We're loading the fuck up. Thank you for whoever's selling. Like that reminds me of basically Sam tweeting, "I'll buy all the Sol you want at $3," and then it giga
yeah. I mean, that's ridiculous. Yeah.
So like, if there's one altcoin I'm not bearish on right now, it's FTT. But generally speaking, I think, let's say you look at ETH, that's like the perfect example of like a bunch of community members trapped and hopeful, because ETH had that great narrative about like EIP 1559 and becoming deflationary, and like it was going to be a super cycle and all. And now, like, I think EIP 1559 is scheduled for like August 4 or something like that. And, the chart doesn't look very good. It's basically at the lows. It could pop up, but ultimately, like, it's been a big deception. And people who were in, I feel like, had no price invalidation. It was like glory or wrecked. And some people were perhaps levered. Or not, but the way you become a community member in altcoins, in my experience at least, is like you basically believe in it so much that you load up, and you believe even more as prices go up. And then when it starts crashing, you load up on more because that's a dip to buy. And then it just stays down and stays down and grind down and grind down. And like, if you look at the E chart, that's what's going on. Basically, people believed in it like a lot. And I think people still do believe in it a lot. Like I think what's different this time is people don't think of ETH as a shitcoin. You know, in 2017, you had literally Arthur Hayes saying it's a double-digit shitcoins, but now DeFi changed the whole picture according to many people. I mean, is it a shitcoin or not? In my opinion, like the only coin that I would be comfortable holding for the long term is probably Bitcoin, just because it's the oldest one and like the most secure. So if there's one coin that I think should survive, should crypto survive long run, I think it's Bitcoin. It's just more robust in a way. So I think a lot of people are like in denial about how bad ETH prices have behaved, and like even if it rips into say EIP 1559, I wouldn't be surprised we see some sell pressure.
Yeah, I mean, I can only co-sign that. I kind of feel the same way.
Like I almost feel like if we rip into EIP 1559, like that's an opportunity to offload for those who are like on the verge of, you know, kind of in denial but still think it will pump. Like I don't see ETH mooning anytime soon, and I think that like even if Bitcoin, like I think Bitcoin won't recover any soon either, but mostly chop. But if Bitcoin was to go down, I think ETH's going to go down a lot against Bitcoin. So it's going to be like at least twice as worse.
Yeah. I mean, honestly, I feel like that's a fair take. I like the shitcoin argument aside, because I mean, I don't want to jump into that boat with calling ETH a shitcoin. Just because I mean, I'm too low IQ to kind of make my mind up on that. Even more so with DeFi now, right?
Yeah, look,
like,
I said it's a shitcoin, but that's because I'm actually a bag holder right now just because I made some profits in ETH perp. But like, I don't keep any ETH spot holdings, just Bitcoin spot. But obviously, if I long it, it's not a shitcoin. But when I don't own any, it's a shitcoin, right?
Yeah, I mean, it's the kind of game that we play with the altcoins in general, right? Like you look at them, they look shit, and then you call them shit, and then you buy, and suddenly now they're looking amazing. It's just kind of how it works.
Yeah, but like honestly, I don't think, like, even if Bitcoin pops up, I think altcoins might pop up too, but I don't like. I think Bitcoin probably goes into like a prolonged bear market in the Mac, and by that I don't mean necessarily it's just going straight down. Obviously, there's going to be big bounces along the way, like we've seen in 2018, but I don't see Bitcoin, like, unless some kind of macro picture changes. Even if Bitcoin went above 40K, maybe towards the 50, I don't see sellers not stepping in. That would seem unlikely to me. So I don't think we see all-time high anytime soon on Bitcoin. Even if it rips up, I'd expect it to get smashed down and eventually maybe lose the 30K towards the 20. And that's big speculation, right? I don't have a crystal ball and I could be totally wrong, but I kind of feel like it's going to be just a crab market down with 30K acting at kind of 6K in 2018. So let's say we bounce right now from 30K, we're probably going back down to 30K eventually. It's just a matter of time. And I think it's more likely that even if we go above 40, we head back down to 30 eventually before any all-time high, in this kind of market at least.
Yeah. I mean, kind of, I feel like we have the same kind of outlook on this thing. Feels like a bear market, trades like a bear market, but that doesn't mean it has to go straight down or straight like up or whatever.
No,
it's
definitely not.
It's just gonna chop.
And especially this morning, like I was hedged from around 32K and 1955 on ETH. So I had some shorts, but I closed everything. I'm actually spot long right now just because I have no clue, and I think we're at support, right? And in 2018, no matter how many times it touched 6K, it's still a support that lasted for like I don't know, was it 8 months or something like that? Like it was super long. Yeah,
Yeah.
like you got on your chart. That was a super long ride, and it just kept bouncing, and that could be the same kind of thing going on. Like even if we bounce big, it's gonna go back to it, in my opinion, or it's more likely. Again, like it all depends on context when a bounce happens, if it does. But just my perspective,
Oh,
30K kind of looks like 6K before.
yeah, I agree. If it plays out the same way again, like, do you remember the last month or two before it broke down, where it just literally just like moved in a dollar range, $1
Yeah.
up, $1 down?
But
That was so
you
miserable.
know what I found funny? It's because when it broke down, and even before it breaks down, people were planning their buys, right? Like you get a 1 year floor that we just tested so many times, and it's like adamant floor, unbendable, miner's floor, right? Like it's impossible to go below, and even if we go below, miner is going to buy us back up because they cannot go underwater. And when we broke down in 2018, people bought and got so wrecked because of that misconception that the market had to go back up. Like, I remember I was kind of caught up in that, and a lot of people just bought on leverage at like 5K, and it kept going down, and they were like, "This is the dip." I think there was that guy Coin Signals, even like he got. That's another story, but he had like a fund that got liquidated, and
Yeah.
a lot of people just thought it had to go back up, right? And
I mean, it did
like,
eventually. It's just,
but like everything I could see on Twitter back then was like, this is a dip to buy around like 4.5, 5K, and like if it breaks down below 6K, I'm gonna buy. Everybody was looking for a place to buy. Nobody thought that like maybe it's just breaking down and it's a bear market for a while and
I
it's
did.
just going lower.
Yep.
Like that was the mentality, generally speaking, from like the circles I was in, at least.
Oh yeah, no, the mentality was basically like 6K is adamantium support, and then if we do break down, I remember this very vividly. The whole idea was it's a quick spike to like 5.5, and then we reverse, like a quick spike to like 4.9, and then we're back up within 2 months. Whereas the reality was, we got fucked for quite a while.
Yeah, I got fucked too on that, but I was poor back then, so it didn't really matter.
Same.
But like, but yeah, like I had such confidence that we would just go get bought back up, and like that was the swing failure pattern of a lifetime or whatever. But it just went down and stayed down for like how long was it? Like 100 days below the 4K.
Yeah, a little
Something
bit
like
more
that.
than that, even. Yeah.
Yeah, like a
4
couple
months.
months.
4 months. I still remember
Yes.
when I bought this, like, it crashed and I was like, okay, this looks garbage. I'm gonna be buying, like, I'm gonna be the smart guy that buys the nuke. And then I bought into 4K and it bounced and I was like, okay, I'm the biggest genius of all time. Basically put my, like, most of my net worth in. And then it bounced to like 4.5 and I was like feeling like a god, and then it nuked to 3. I was like, fuck.
Bro, where you got your mouse right now? I got liquidated like at the pico bottom.
Oh,
Like,
yeah, I still
one
remember
one
that.
of those. I literally DM'd you my position was like 600K on high leverage, and
Yeah.
literally that bottom wick at the absolute bottom of every exchange was my volume getting liquidated on BitMEX.
I mean, that's something,
scary-
right? That has
yeah.
to be like an achievement in itself, right? If you get
Yeah, that was
liquidated at the
talent.
bottom, I mean, it's basically as good as getting filled out of at the top. But in general, like if you compare this to back then, do you think if this breaks down, you don't want to be buying it, you want to be buying like near 20K or something once it actually starts ranging, or what do you make of it? Like,
Well, I'm already doing the crystal ball guessing, so might as well keep at it.
yeah, please.
Look, I think that it all depends on kind of the context, but generally speaking, like I don't think we're ready for like a massive breakdown. And as I said previously, like even if we break down, I don't think you want to be the guy just blindly setting bids and getting it if you're using any form of leverage. Bitcoin historically, it can correct like up to, I don't know, 85%. It did it a couple times, and like if it did, that would be, I don't know, 12K or something. So it can go lower, much lower, but it can also just never reach that low. Nobody really knows or has that much of a clue, I believe. And like ultimately, if it breaks down, you don't want to be the guy who just fades momentum, because you never know how low it can go. And I still remember that Barry tweet saying like, there's hidden forms of leverage in the market.
Oh yeah, that was a good one.
That kind of haunts me. Like I would just not set passive bids. I do have bids on spot around and below the 20K just in case, but I would never use like leverage to fade such a breakdown, because you never know what's gonna happen, right? The next thing you know, you got like open interest skyrocketing on the dump, and everybody, like a bunch of people are levering up, and it cascades down to 20K, and that can happen. And or it can literally just wick back down, get rejected, spring back up a couple $1,000 instantly. It's all about context, and I think I'd have to monitor to kind of know what's going on. So my best move would probably be to just set an alert, and if it does break down, I go watch and I decide what to do then.
Yeah.
I would definitely not break down short, that's for sure. Like I think anybody breakout trading Bitcoin currently is asking for trouble. It's not ready yet. Maybe if the context change in the coming few months, then it becomes acceptable. But I know what not to do, and it's breakout trading right now. So at least that's a good thing going on.
Yeah.
But for what to do, it's a lot more nuanced, in my opinion.
Also, one of the arguments against the nuke is the argument that, you know, the futures market is like basically wrecked and open interest is wiped, etc., etc. So like if we break down, there won't be that big of a nuke. But as you mentioned, that can change pretty quickly, right? Like one of these drops, if you get a bunch of like leverage just suddenly enter the market to buy the dip, then that can actually itself be a post breakdown cause of a cascade lower, right?
Yeah.
Just because those participants aren't currently trading doesn't mean they won't come into the market at a later point in both directions.
True. And I don't know if you remember, but when we were going up only, like a leverage collapse like we had from like 60K to 50K was deemed impossible because institutions were so eager to buy the dip.
Yeah.
Right? And then it fucking collapsed from like 60K to 50K in one candle after the coin launch. And everybody was like, nobody really expected it that much. Like I was actually short that day because I expected a flush, but I never thought it would go that deep. And also I kind of fucked up my exit that night. But the point was that like institutions were not so eager to buy the dip because not only it crashed 10%, but it didn't go straight back up.
Yeah.
So yeah.
I mean, in general, they've been trading actually, which is hilarious, right? Like we had this huge meme going on everywhere on Twitter when like a big trading firm or like any institution just kind of announced that they were buying or that they have bought. People were like, yeah, they're never going to sell. Their time horizons like 10 years. And then Bitcoin went up ×6, right? Because they all like looked at it in like the 10K area. And then they all started selling, right? Being like, okay, apparently like they don't, right? I mean, like they don't have that time horizon if stuff just goes crazy. And I mean, I'm not surprised because if you think about it, like they're trading traditional markets and then they get like their like 20% moves in a year, which is like record breaking. And then they buy like a bunch of crypto and it goes up ×6 in like a couple months. I'm not surprised that they're taking profits, right?
I'm pretty sure
pussies,
it's called proving. It's proving liquidity. It's not the same.
Oh, is that like the
They're not dumping on us,
thing?
they're proving liquidity.
No,
I think it's testing liquidity.
It. Yeah,
that's right.
But I think I heard that in the Suzu podcast. Like basically, Saylor did mention that, like, did say that he can sell. And he's never going to be forced to sell. Like he's not going to get liquidated or anything, but like he can sell if he wants to.
Yeah.
And like he reminds it, I think it's Suzu saying that Sailor reminded us that he does have a sell button. I don't remember exactly the podcast, but basically that was in one of MicroStrategy disclaimers. So that misconception that Sailor can get liquidated, I think, has been kind of debunked. Like he's not going to get liquidated,
Never.
but
Yeah.
that doesn't mean he'll never sell, right? You never know. Obviously, he doesn't seem like the kind of guy who's going to. I mean, he's kind of a fanatic about Bitcoin from what I see, but like you never know. Maybe he will, and that would be false to say he will never sell, and you're 100% sure. Like people can change their views as things develop. Always, I don't think he will, honestly, but you never know.
Yeah, with people like him, I think what they do is they talk themselves in a corner. So kind of what he did, right, is like he repeated so often that Bitcoin was the safe haven and that Bitcoin was the only thing that was gonna go up, blah blah blah. That he now is kind of like backed in this corner where it would look really bad if he sold, and he's not going to because he's personally so invested.
But I think he's going to buy more, right? Because he sold some stocks. There was some big announcement of companies buying like $1 billion. I think it was 600 million from a big company. I don't remember exactly who, and then 400 million, and that totalized the 1 billion stock offering that they did, which was probably to buy more Bitcoin. I don't know if he already bought, but
I think
like,
Fred, you talked about this, right?
but like he definitely did sell 1 bill worth of stocks, and he has that money. Whether he spent it already or not, that I don't know.
I mean, I remember him having like doing that like a while ago, and he basically bought some Bitcoin, and I don't know if the newest one is already
Yeah,
filled.
I'm not sure if he completed the purchases from the stock offering. I don't think so. I think we would have heard because he normally just says he bought the top after he bought the top.
So he's maybe he's the guy making this hold today or whatever. Like who knows? We'll see. We'll see if there's an announcement coming in the coming days. But I don't think he's the kind of guy to just wait for price.
No.
In his views, it
No,
seems
he doesn't care.
Like anything below 150k is good for him. Just fucking smash the market.
Yeah. It's actually wild to see, I think. Like, it reminds me so much of like people that got into crypto with me, where they like start out relatively sane, right? They're like, okay, I'm gonna put in like 15% of my net worth, which is already a little bit insane. But I mean, depending on if you're a student or like someone that has an own business or something, the big difference there, right? But like he started out with that, right? Like, okay, I'm just gonna put in some, and then it goes up, and then all of them were like, okay, I'm stupid. I should have put in like 50%. I would have made so much more. And then it goes up further, and they're like, fuck it, I'm just gonna put in 50%. And it goes up more, and they're like, fuck it, I'm gonna go all in. This thing's like the next big thing,
Mortgage
right?
your house.
Yeah, and then it inevitably at some point goes down, and then they get wrecked, right? And it feels so similar with what he's been doing, because what he did basically is he had an entry that I think if he kept it that way would have never been retested in the 10Ks. Basically, if Bitcoin does what he thinks it's going to do, he had more than plenty at that point to be one of the richest men on the planet, right? So it's like, why do you keep buying more? Because at that point, all you're going to do is kind of put yourself, like, you're getting more risk, but
no reward.
The reward is like, I mean, if it does what he says it's going to do, the reward is basically the same thing, right? Whether you have like a citadel or 2 citadels, like, I mean, that's not going to make any difference.
I think it does. Look, I think the Sailor argument is basically like he doesn't care about being conservative. He's already personally rich, right? And I think you and I have actually discussed this. He's super rich. He's got his own Bitcoin holdings, MicroStrategy, etc. Like, he's fine. So for him, the bet is either I become basically Bitcoin God, bet everything, and if I win, I'm literally like the one who caused the bull market and then kept adding conviction, blah, 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 and literally becomes a legend. Or the MicroStrategy play doesn't play out and it goes bust and he's still super fucking rich, right? I think when you get to that type of like, I don't know, net worth, conviction, and all those things put together, you kind of have to make extreme bets. And that's basically what he's doing, because the worst case scenario is that he's still rich, happy, etc. But the best case scenario is he's actually God Emperor of the universe, you know?
He's got to get his adrenaline shot, man. I get that. I understand him.
I mean, the thing is, right? Like the one argument I would say, like, yes, that makes sense, but like I think he didn't need to do it to achieve that god status, right? He bought a shitload of 10K. It went to 60K. He was like the hero of everyone. I think he would have been just fine with that. Like he would have achieved his god status. He didn't have to like even risk that much. Like that's like I think he was already in that position, and now people are like, okay, this guy is just a decent gambler, right? And if it goes up, I mean, they're gonna be like, okay, this guy just bet the house and got lucky, instead of like, okay, I don't
like how he advocates like going all in and disregarding risk totally. I think that's dangerous, because like the way I view Bitcoin at least is there's a chance, albeit I don't think it's going to happen, but there's a chance it fails and like goes to zero. Probably very unlikely, but there's a chance it never really kicks in and goes into like 100K plus or whatever and just grinds back down and becomes kind of obsolete over time.
And then ETH becomes the next big thing.
Yeah, no, not necessarily, but I mean, maybe, who knows? But the point is, like, it can fail, and in some people's mind, it's almost as though Bitcoin has to succeed and will succeed, and there's no other option. But because it can fail doesn't mean it's bad risk to have Bitcoin. Because it can fail just means that you probably don't want to bet everything that you have on it. But if it does succeed, the payoff is like a lot bigger than if it doesn't, right?
If you know it can't fail, you're probably like late, relatively speaking, right?
Yeah. Let's speak hypothetically, but let's say Bitcoin at 30K, it has like within the next 5 years, maybe it goes to 150K, or maybe it goes to like 5K and just becomes the new Dogecoin. That's still great risk, but like there's still a big risk that it just you lose a bunch of money on it. So if you're all in and you bet like everything, like it's good risk, it's good EV in a way, because like it's going to outperform the typical the typical returns. It's just going to be way more volatile. But also, if you have everything in the mortgage, your house, and like if it goes to zero, you're basically screwed in real life and financially indebted. Then you're stupid because you bet too much on it. And I think that's a dangerous mentality that people have, that it's all about crypto and crypto has to be the future, because I think there's legitimate arguments that we don't need it and that it might fail. You got a bunch of regulatory uncertainty. You've got CBDCs coming with governments not necessarily liking it. The China ban that they actually fucking did a good job cracking down when in 2017 they never could. So it doesn't have to succeed, but it can. And the fact that it can't, that it can succeed, means that if it does, it's great risk to have at least some exposure. But people who advocates going all in and like getting a debt to buy Bitcoin, you're not just risking the money that you have, you're risking a debt and like financial wrecked for life, maybe.
Yeah, I mean, if you bet your ability to bet, that's always a shitty bet, That's
I love that a lot. I mean, the thing is, right, with this entire thing, like, because Saylor has been saying that, right? Take debts and go all in crypto, right? And it's easy for him to say because he has, like Cret said earlier, zero risk involved, right? The guy is going to be rich no matter what. So, like, coming from that standpoint, sure, right? But it's a little bit different for the average guy. But I definitely agree with your point that, I mean, if you go, it depends kind of how old you are too, right? And like how far along in the journey of like your finances you are. Because like, let's say you're a student and you have like $2,000 or something, and you look into crypto and then you listen to us and we talk about like not all inning, I think that's not going to help you much, right? All in away.
Yeah, if I had $2,000, like I would all in the fuck up and maybe look to lever up, because like $2,000 you can probably make that in like a month working at Wendy's. It's all relative, right? But if you have like 200 grand and you work years to get 200 grand and you all in that and you also get a mortgage on top, then you're risking multiple years of your life. It's a completely different context, I think, and depending on your age as well, it might put your retreat at risk, and etc. And I'm not advocating going all in just because you have less money. 2K in some countries is a lot, 2K in some other places is less. It's all relative to your personal context. But yeah, I agree that if you're younger and poorer, you have less to lose, so you can take bigger risk, and you can always work it out.
Yeah, that's the one thing I didn't do. That's one of my few regrets from like early crypto when I was a uni student. I just learned sort of standard risk management pretty early on and didn't consider like the asymmetry of crypto and then my own personal circumstances. So I was still being like way too conservative, both in trading and portfolio allocation, which, maybe over the long term, plus EV, learning those lessons, etc. But definitely like for my circumstances, then I could have hit the gas much harder, so to speak,
Yeah, sure. Like I think I was kind of all in, but I had like in 2017, but I also held through the bear market and lost everything. So it goes both ways. But as also like, even if I lost all my money, it doesn't matter. It's like I'm 17 years old, going to uni. I did have a little bit of money saved, but let's say 90% crypto was okay for me at the time, because even if it goes to zero, it doesn't change much in my life. Like I can work a summer and make enough money to go by. I was lifeguard at the time too, so like in 1 month I could probably make my initial stake.
Yeah.
So you've always been helping people stuck underwater, is what you're saying.
Oh yeah, rescuing the drowning. No, I think Salsa's more of the guy that's just like sees someone under pressure and then he's like, okay, I'm gonna buy when he gets liquidated.
I'll step on his head. That's why he's not a lifeguard anymore. He just saw these people underwater and started fucking drowning them.
I'm not that evil. That depends on the coin. If it's ETH, maybe.
I mean, that's Doge with me right now. No, fucking.
I think if ETH breaks down, you have a moral duty to buy 1559, even if it's just like 1 ETH or something, right? Just to have like a historic buy order at 1559, even though there's like no support there. I think it's like important as an NFT. You just make a new account and you buy 1 ETH at 1559, and then you sell it for like 100 ETH. I think that's one of the best trades available if we break down.
I think that what you have to do is you keep buying like 10 contracts, and if it's not the bottom, you close and you buy 10 contracts again like a minute later. And you keep doing that until you nailed the absolute bottom.
And then you post on Twitter.
You post it on Twitter, position, whatever, and you open the paid group. That's the best risk-reward play, because paid group, zero risk on the upside. You don't even have to trade. You just basically sell shovels to people who want to dig their graves. It's great.
I mean, definitely. I honestly, like, with regards to the paid group thingy, I mean, I kind of agree. Like, it's the brain dead play, and that's, I think, why so many people do it on Twitter. Is because, like, I mean, it doesn't really take you much, and you can see the same with like influencers, a la like BitBoy and stuff. Like, they weren't really around in the bear market, right? They just kept
allegedly. Don't sue us.
Allegedly, yeah. But they were really like a lot of people. What they do, right? Like on the influencer side of things, like they wait out the bear market, post like a bunch of bullish stuff during the bear market, still maintain their profiles, and then start ramping it up once price goes up, and then you can just recycle that over and over and over again.
It doesn't matter if they're wrong when it goes down, because you can always delete and eventually you'll get it right. And when it goes up, that's when the masses of people flow in. And what they see is that those people who were wrong for like 2 years in the bear market were right calling the bottom because they kept calling it like every fucking day of the past 2 years, right? And when they get it right, only that, you pin this to your tweet, that's it. You nail the bottom and you stay the bull, all the bull market. Open the paid group. You're a glorified champion. Everybody pays you for investment advice.
You know what? At least back in the day, right? If you have a paid group, there came some minimum obligations. Like you have to show up and answer stupid questions and do other dumb shit. Now it's even lazier. It's like, hey, look, I found this token, IDO. I'm an investor, quote unquote. Here's my TA on a chart which is 2 hours old. You should check it out. And then you make the same money with like one fucking tweet instead of grinding 12 hours a day in Discord, you know?
I mean,
yeah, or you just chill it and dump on your paid subscribers liquidity, BitBoy style.
I mean, the thing is, like,
allegedly, not actually BitBoy. When we say BitBoy, it just means like any boy, i.e. male, who has bits. That's what's being referred to.
Exactly.
Please don't sue. No, but for real, like, that is something that this cycle has been happening a lot, right? Where people shill, like even TA guys shill new IDOs and then they dump on people allegedly, or like do some other like stupid shit with it
in Minecraft.
Yeah, it's been really frustrating to watch, because I think like if you like there's a few ways to be a scumbag in this space, right? And I mean, I would say like most of the paid groups that are around are like a part of it. The thing is, like, shilling complete garbage while knowing something is garbage and then dumping on your followers is like a bunch of steps higher up in the being evil kind of scale. Because I mean, that's just fucked up, right? You get people to buy garbage and then you get money for shilling it to them and then you sell on top of them. Like, that's as evil as it gets, I think. Like, I don't see like any way in which you can do anything worse. And that's been like kind of the thing that has bummed me out the most about this cycle, because that's been the story of it, like pretty much from the get-go. And that's been very, very sad to see, I think. But
yeah, I think that generally speaking, like, if you're going to be a paid group leader, you have literally zero upside calling for anything bearish. So there's like a huge conflict of interest to just be a perma bull, because like in the bull market, that's where you make the most money anyway. So if you're right in a bull market, you make 10 times more than if you're right in a bear market, because the way less people and people are poorer. So
yeah,
like generally speaking, when prices go up, I think that can kind of fuel the bubble in a sense, because like they get pretty big, the promotion, etc. Like everybody just chills because you want to be right in the bull market because people will think you're a god. But really what you're doing is just piling on risk, hoping that it keeps going up in a way. And like you see those guys that, yeah, you can make a shit ton of money in the bull run and probably outperform good traders because you're just buying dips and stacking longs over longs and longing your longs. But when the crash arrives, you kind of lose everything and your subscribers lose everything because suddenly dip buying doesn't work and you keep repeatedly losing money on leverage. So it compounds very quickly.
One thing that I also notice is that a lot of people claim to join those ventures to like learn how to trade, but there's an inherent conflict of interest as well. Or like, it's not really a conflict of interest, it's just like juxtaposing forces. What you'll notice a lot in those groups is that they'll set like 10 different take profits for the same trade and then immediately move stops to break even as soon as it goes onside for like one tick. And that's not good trading. It just makes for like good optics and nice spreadsheets, nice win rates. And it keeps like the lowest common denominator in your group, like the biggest idiot, it keeps them afloat as well. So if you like join those, like it's the so-called educational groups, so you're joining them to learn how to trade, I think it's worth acknowledging there's like an inherent problem with that, because the types of trades you're going to be getting have like a business incentive built into them beyond just what is a good trade.
Break-even stops, especially if you share it to many people, they don't work. You're going to get slipped the fuck out, especially if 100 people have the same exact stop loss. Like it's basically a game of who's going to front run the stop at this point. And not only that, but the people paying for that kind of services, they're basically paying to be misled and like fooled into unprofitable trading ideas, and like they're gonna waste money in EV in the markets, as well as a lot of their time, as well as being misled and having false beliefs when it comes to trading. Like it's just a terrible bet. And like when I say paid groups are all scam, that's because they're most likely scams. Like it's kind of like shit coins. 99% are scams and maybe 1% are not. But even there, you're more likely to pay a charlatan who doesn't make his money trading for investment advice or trading advice, when in reality you're just going to waste your time, be misled, and waste money on them. That's why I keep saying that paid groups are kind of a scam in general.
I mean, in general, like with trading, right? You're basically always on your own, right? You might have like a group or whatever that you can share ideas with, but in general, like you're the guy that's gonna push the buttons, right? And if you don't learn that early, and if you kind of rely on someone force feeding you stuff, like you get with these groups, you're not gonna make it in the long run. That's just kind of like, even if it's a good one, you're still kind of doing yourself a disservice, because you're not gonna be learning anything, right? It's basically like, I don't know, like playing in a football game, never touching the ball, but having like 3 or 4 people there. In the best case, like most of the time, they just don't know what the fuck they're doing. But even in the best case, that just carry you to victory. You don't learn anything, and at some point, you're gonna have to stand on that field by yourself, right? And then
I think people are really uncomfortable with uncertainty. They don't like trusting themselves and taking risks on their own, and they think that paying somebody to basically generate them random freaking ideas is better just because it's more comfortable for them. But really, like if they just generated their own ideas, eyeballed it, it would probably be as good or probably better, because less crowded. Like if you're in the paid group with like a 1,000 people, then 1,000 people take the same trade. You know, it's even worse than if you just eyeballed your own idea. But ultimately, I think it's generally edgeless.
Yeah, like a lot of confirmation trading, I think, is actually really edgeless.
Yeah, it's bullshit.
Like it's just not fucking real. It doesn't exist. It's just a line on a chart. I had to learn that like the hard way for a lot of my systems. But yeah, when you say, oh, this will, like, as if there's something magical with price like doing that something, and suddenly the odds of the bet go from like shit to great just because of a candle close or something. It just like generally doesn't have the type of impact that people think it does. And when you sacrifice like that uncertainty in return for quote unquote confirmation, like the best entry is gone, and sometimes the whole trade idea is gone by then. You know, like confirmation is never going to be like, is a lot of the time you miss out on the best trade by waiting for confirmation.
The best way to enter a trade is like typically in the uncertainty, when you, like, in my opinion, like you got to take a risk on the entry, and like it's got to be a kind of lucky entry in a way. And there's many ways to do that. I'm not gonna, like, I don't have the holy grail to trade, but generally speaking, you want to enter at a spot where there's uncertainty, yes, but like you don't want to wait for the market to bounce if you think that there's going to be there could be a spike and it would be the best entry. Like you risk it, and if it just stays down and stays grinding heavy, you cut it without a second thought. But if it wicks back up, you might be right or wrong depending on the development or the reasons you enter a trade. But generally speaking, you can make money while not even being right.
Exactly. I agree. I've said the same shit. Like if someone listening to this has no idea where to start, you just pick like an area where you want to buy or that's attractive, and then you wait for it to look like total fucking dog shit, right? And when it looks like it's about to roll over, maybe that's when you get your first entry, and you either like got like a great entry, or if you're wrong, there's still a chance you can exit at a pretty decent price, as opposed to buying the confirmation breakout and then just getting engulfed or whatever, you know?
Especially in the market like this, right? I think honestly, like the confirmation stuff has its place in market conditions where like even the biggest idiot can win, right? Like let's say you have like
it's a meme because of hindsight trader. Sorry, like basically if you say if you draw a squiggle with like a kind of confirmation arrow or whatever, like you can just go back in hindsight and see you called it. And if it rolled over, then it just never got the confirmation, right? And you post it whenever it's in profit if it looks good or whatever. And like, it's mostly a meme, but if you wait for that confirmation, you're taking on more risk than necessary. And if you're wrong, you're definitely losing money, or most likely.
I mean, that I agree with, but I think, like, for example, in the up only part of the market, right? If you literally bought every single breakout above resistance, you made a bunch of money, right? And you could be calling that, okay, like the breakout above resistance is my confirmation, and that would have done you like not poorly, right? It's just it's not the most optimal way to trade, in my opinion, as well, because like you could have just been buying, like if you think this goes up anyway, you don't have to wait for it to break out, because then you've already missed like half of the move that you planned.
Yeah, I mean, that can work. And I think the important part is kind of having a plan. Like if you're breakout trading in an up-only market, the real breakout trade is not to buy the breakout. That part is like super fucking easy. Any idiot can just breakout trade, right? But if you truly believe in the up-only market, then the question when you do breakout trade is, what do you aim for? Will you have the hands strong enough to hold to target? Because it's rarely a straight line up. There's like kind of dips, and if you focus on the 5 minutes, you're going to get chopped out if you don't have that conviction. And most importantly, where are you wrong? And like, what would it look like if you're right? What would it look like if you're wrong? Because you need that invalidation in the breakout trade, and you need to be ready to cut. You cannot just buy a breakout as a trader and have no invalidation, right? Because like if it dips after the breakout, what is it? Do you add? You need to think about that in advance, because if your entry is basically you go all in on the breakout, then you cannot buy a dip. But if you buy, let's say, half on the breakout, and then if it dips, you buy a bit more, or you just, if it never dips, you just miss, like, that's all right. But you don't want to be the guy who breakout trades without an invalidation. So first of all, you want that invalidation, and then you want to know why you bought the breakout, right? Because if you just buy a breakout because it's a breakout, and then I don't know, you don't really know why you did that, then you're just going to lose value.
Yeah, I feel like if you're buying a breakout, you kind of just, if you're anything but right, you lose money, or you're put in like a really uncomfortable position. Whereas if you're buying nukes, like even if you're slightly right or somewhat right or less right than you anticipated, whatever, like it's much easier to manage that position when you're buying low, so to speak, as opposed to when you're buying what could be a top, just simply hoping it isn't the top. You know, that's what always made me uncomfortable.
I definitely did buy breakouts before, whether it's through a stop loss on the hedge or whatever. But like the important part, I think, here is basically knowing why you buy a breakout and knowing what kind of risk you're taking, and being able to assume the full reward to make your risk worth it. You know, like you can't just buy a breakout and then you have no idea why the fuck you bought it, so you stare at the 3 minutes and you just go by the feeling depending on the next candle.
Yeah,
that's just a sure way to lose.
The thing is, like, the less you kind of think about what you're going to do before you actually do it, the more you're going to panic afterwards, right? Because like everything, even more so like when we're talking about breakout trading, like that shit is terrifying, right? Because we all know like the pattern where it kind of rates the high and it just nukes completely. Imagine you buy that and you're like sitting there without invalidation, without anything, and then you're getting wrecked and you start like panicking and you don't know what to do, right?
Yeah.
Or even it starts breaking out and then it retraces a little bit, then it's back to where it broke out from, and it's like, okay, what do I do now? Like if you don't think about that stuff, completely agree, you're just gonna be like trading really poorly. Like even if you luck out and it goes your way, if you didn't have a plan before, it's not going to be a pleasant experience, right?
I feel like for breakout trading, stress. I know that's stress, but like I feel like also for breakout trading, you need to have a time-based invalidation for your trade, because typically, if you're bullish on the breakout, it should be quite aggressive, right? Because if crypto breakouts aren't aggressive, then the longer it stalls above the breakout point, the higher the probability of some sort of BART pattern full retrace. And there's no way you're getting out like in a decent exit if you're caught on the wrong side of one of those moves. So if you're like breakout trading, you should have some sort of understanding like, okay, what time frame is this breakout, and how long realistically do I have to give this thing to rip? Because if it's getting soaked up by like passive sellers at the breakout, and then you're one of the people buying into them, that's fucking trouble. So I feel like for breakout trading, time-based invalidations for ideas are like especially sensitive.
Yeah, that comes down to basically your entry reasons and what it would look like if you're right. Like personal preference, the best breakouts to the upside are those that don't necessarily like let's say you take the all-time high breakout above 20k.
Yeah.
It never retested 20k. I think it stalled at like 22 or something. I don't exactly remember,
yeah,
but
23.
like it never gave a retest of the previous high, and those are the best for trending conditions, in my opinion. And it's very rare. Like breakout trading is you're most likely going to be wrong a lot, but the few winners are going to make you many times your risk.
If you can hold them, right?
Yeah, because that's the thing, right? You do this over and over and over again, and then you lose and lose and lose, and then you're like, okay, fuck this. I've lost like 10 times. I'm just going to sell the first resistance and make some of that what I've lost back. And then it's one of the ones that runs like 15 times your risk. And you just sit there with your hands in your pockets being like, fuck. I mean, I hate that kind of trading because of exactly that reason, right? Because you're going to have to go through so much pain to be eventually right. I much rather be the guy that just like sells into liquidations to the upside and then buys liquidations to the downside, or like in general, just I like to sell in like euphoria and try to buy panic, and like most
you must think that sounds really cool, huh?
Yeah, but I mean, most of the time that shit works, right? And even
I mean, we've seen that euphoria can last for a long time.
That is true. I think in general, there's one condition in this market that is easy to trade, and that is the breakdowns. Like in general, I can't remember the last time where I bought a complete full nuke where I didn't get out of it in profit in this market. Like it happens so rarely, unless you just go in with like huge leverage, right? That if you give it enough time and like kind of let it go towards you, that you kind of get completely ran over. Because let's say you even on the way down from 60 to 28k, right? Let's say you bought 35, right? The next day you got to sell 40, and then I mean, if you didn't sell 40 at that point, let's say you bought.
Tell you what, I made more money longing since 60k than shorting, like probably a decent chunk more.
Yeah.
And the market is down a lot since then, but just because the bounces are like the most profitable play in my opinion, especially when you get those kind of nukes, as you say, and there's a bunch of dislocation, allowing you to stack more size for less risk. And also, I think that especially the altcoins, I had some great plays on Dogecoin on the crash and like ETH, especially the altcoins, like they overextend even more than Bitcoin. So if you pay attention to the right things, you can make money. And futures sometimes this get from big premium to big discounts. Like when things really get fucked, there are great opportunities because people are not ready for it. So somebody who is not wrecked, like most of the participants, is basically able to take a large share of that pie, where other people are maybe too busy handling their underwater positions or mitigating their liquidations, or I don't know, completely wrecked, unable to bet.
Yeah. I mean, in general, like what we see all the time is like, and this is a story as old as time when it comes to Bitcoin, is like every single time it goes up, people are like, okay, this time we've gone up so far, like serious people are involved in it. It's never going to drop 40% again. We've heard that like literally since the beginning of time for Bitcoin,
Bro,
right?
I was listening to Alex Y's stream, and I think it was at 55k or something. I don't want to talk shit because I like him, but like in his stream, he literally said like something like December futures are a great buy, even though it's at the premium, because it's probably never going to like 30k again. like he was speaking as though it's impossible that it goes back there to like 30 or something. And back then it was like, if you remember the sentiment, like most people agreed with that. Like 30K again, it sounded completely insane on the way up. But it's basically, it comes down to, if you're a trader, you need an invalidation. Maybe for him it was 30K, so that's fine if that was his trade. And I don't know
I'm
what.
sure 30K is a great invalidation. You know,
I mean, I don't know. I don't know what was the trade. Like, I'm not him, but
Yeah.
a lot of people, they basically bought because they think that it cannot go down. Like, they think they buy as traders, and that's the most dangerous to do with altcoins. You buy as a trade, or you think you buy as a trade, but you have no invalidation, so it's not a trade.
Listen, I'm fucking proud of my role as Telegram community manager. You know, I serve a crucial function for all my altcoin investments, and you know, play a very important role. I think with crypto, people have to remember that like higher prices lead to higher prices, and lower prices lead to lower prices. And putting a ceiling/floor on that fancy, you know, fucking love this word, reflexivity. You just use it anytime you want, and people don't question it. Putting a floor and ceiling on that is like really, really difficult. So to the upside, 60K or whatever, 65K is just insane. And I think, you know, people caught their pants down at 30K shouldn't, you know, for future cycles. It's just how crypto works. And whenever you get a narrative saying dip of this size is impossible, I guess that's when you should get worried, at least.
That's what you should be targeting.
You should always be worried about your downside. And that's the thing. Like, the kind of up on the market we had made people super complacent because they did not think about their downside. They did not remember what it's like to get liquidated or wrecked. Like, your longs get completely fucked because the kind of market basically allowed a lot of participants to just keep longing their longs, buying more altcoins, and it never ends. And then every dip was like free money, right? But when it stops working, that's where, if you had stopped thinking about your downside, you basically are the guy who loses everything on the downside.
Yeah.
So
I think go on.
Yeah, so I was going to say, like, those guys who were like gods and outperformed on the way up and were glorified winners, they're most likely the ones who got wrecked the most since 60K. That's just
for
how
sure.
the market
I mean, you
works.
could even observe it from P&L posting, right? The market would drop like 5 to 10%, and you'd see several posts of like several $1 million in losses. And so I wonder like what those P&L sheets look like when the market drops 50% and altcoins drop 70%. Probably doesn't look great. I think one of the trickiest bit in this market was when Bitcoin topped and was going sideways. And so you're thinking, okay, do I risk off? But then ETH breaks out, makes new all-time highs, ETH BTC flipping, deflationary, EIP 1559. That was really tricky. And I almost basically FOMO'd back into the ETH top because I was just like, this doesn't feel like a risk-off market. With, you know, Bitcoin, I was just bearish and in cash, but I'm like, do I just use all this cash to buy ETH? And obviously the answer was fucking no. And then Don played a strong part in telling me that I needed brain surgery if I were to do that. But I think in terms of like rotations, that specific like late cycle decoupling with all the big talk around flipping made it really difficult to.
But
you know,
that was crazy, right? Like, ETH really had that strong narrative this year. Like, in my head, at least, it was like you seen those people chilling the flippening narrative, but like we had it last cycle as well, the flippening narrative, but this time it was really, really, really strong, and it still is, in my opinion.
Mm-hmm.
So it kind of makes me worried for ETH. That's kind of why I only dare to have Bitcoin if I think that we're at the bottom, because like if you're spot Bitcoin, you lose way less than if you're spot some altcoins, obviously. And I still think there's a big cult of bag holders on ETH.
Yeah, I mean, it's crazy how like that narrative was so strong, and ETH didn't even get back to where it was in 17, 18.
It would be interesting because the closer we get to August 4th or whatever the date is, like, you know, we're gonna have that EIP 1559, that which we've been talking about that for like the past 6 months. It's been a pretty prominent thing on social media, I believe, podcast. I heard many podcasts from months ago about EIP 1559, and I think the assumption on it is that it will make ETH deflationary. Like, that's the assumption. Now the question is, will it really make ETH deflationary? Will it be a success? or will it be a disappointment, or will it beat expectations, which I doubt, because it seems like it got hyped up a lot to me, but I could be wrong.
I think in general it very much depends on where the market is at that point, right? Because it like the entire thing depends on ETH being used a lot, basically. And if we're in a bear market, that's not going to happen, right? So what then is going to happen is, imagine that, right? A bunch of people wait for this news, hold their ETH, even like leverage into it, and then the market is kind of shit and has been shit for a while, right? So they're gonna be like seeing. I think it's gonna be the same thing as the Coinbase listing, basically. Whereas,
Seldom used.
yeah, I think it's gonna be seldom used. But in general, like what you can do if you don't like, if you think it's gonna be super bullish or like whatever, or you're not sure about it, you can just see what the market is doing afterwards. If the market dumps in like afterwards, because like no one's really interested in buying it after like after EIP happens, then I mean I think it's gonna be a sustained dump and it's gonna mark the ETH BTC top, right? But if we start going up, I think there's a good narrative to go like higher.
But you know what?
Sorry,
Sorry.
go ahead.
You can finish. Sorry, I didn't want to cut you.
No, but I think in general, like, I don't want to. In general, I think it's going to be a seldom used event. But I mean, if it shows strength into it and afterwards, I'm more than happy to kind of like rethink that.
Here's my take on that from recently hearing Kobe talk about it. So it got kind of really hyped up, I believe, because in the bull run, the ETH network was so clogged up because people used it like crazy, right? So like if EIP 1559 is deployed successfully in that kind of condition, it will burn a shit ton of ETH because the traffic is insane and every transaction burns like a tiny little fraction. But in a bear market, there's way less traffic. So what I think the danger is, like, I'm going to be the advocate of the devil and like speak my bear case to actually agree with you that it's most likely a seldom use it's because basically it got hyped up so much in a bull trend, and people who chilled EIP 1559 as a hugely deflationary catalyst for ETH tokenomics were basically taking into account that the kind of traffic we had through the uptrend, which was insane, like the gas fees were just skyrocketing high because everybody was trying to transact on ETH and use DeFi and etc. But like the current traffic is nothing like that, which it was before. So like EIP 1559 got kind of overhyped, and I think it's going to be hard to meet the deflationary expectation that people had back then in the kind of market conditions.
Yeah, that's the straightforward bearish case for EIP, right? 1559 specifically. It's basically that the deflationary argument is built on a certain amount of usage, fees, transactions, and so on, just economic activity. And that economic activity won't have returned by the time 1559 goes live. And therefore, the deflationary catalyst itself doesn't get used, if you will, because the fucking network's basically completely different in terms of usage.
I'm in no way a technical guy. Like, I don't know shit about code, but like, I don't know if it's risk-free to implement. Like, I heard there may be some miners doing shenanigan stuff that can hurt the network before it gets implemented and stuff like that. I don't know how true it is. I don't exactly know if like it's going to be a clean transition or not. What are the risks? But from what I understand, there are even other risks aside from that overhyped thesis from the bull run activity.
Yeah. Another completely different topic, and I'm sorry for like jumping out of this one so quickly, but
go for it. We don't know shit about technicals anyway, so probably best to move on.
Have you guys been looking at the traditional markets, because they've been dumping today and Bitcoin's actually been holding up pretty well? Is that something that you kind of look at?
Yeah, I've been looking at the S&P, and basically since it started dumping, Bitcoin has corrected a little bit. Like S&P started dumping at like 14, 15 UTC, and Bitcoin has topped around there, but it's been holding relatively well. Like it's in no way collapsing, and I think that that's probably good. But obviously, if like S&P accelerates downwards, then it would probably be bad.
I think it's
But,
pretty clear that Jerome Powell is rotating from S&P to
yeah,
BTC.
who knows, man. But I think you need to not pay too much attention to S&P. Like, you need to watch it because it's insightful when there's like violent crashes, especially when there's violent moves to the downside. And I've been noticing it, especially since the Corona crash. Like, when I think it was around 8 to 10K, Trump was speaking and he said that there's going to be restrictions between, I think, Europe and USA, or was it China? I don't exactly know. It was like flights restrictions.
Yep.
And stock market started nuking like crazy. And if the stock market has a violent down move, Bitcoin tends to correlate since then, at least temporarily, and oftentimes even afterwards on the bounce. But I think that people have been paying attention for the past year to it a lot, which kind of cancels the edge out. But back a year ago, March 2020, and like the April bounce, I remember like after the Corona crash, there was a solid 3 days that not many, I didn't see it anywhere on social media, and it was super insightful. Like, you could literally trade Bitcoin off of the stock until I think it was that day at 5K when stock market went limit downs like
Yes,
twice.
yes. I was trading a small account at that time, like a challenge meme account on Deribit, and I got liquidated trading that correlation. That was fun. Don, you remember that shit? I messaged you about it.
That was the ultimate like buy signal to me. Not buy signal, but like stop shorting signal, because back then for like 3 days in a row it was almost a perfect correlation, and then suddenly S&P starts just limit down and Bitcoin doesn't care. It just stays grinding up for like 48 hours. I think it was at 5.3K. I had some screenshots. I was using Sierra charts.
I've got some emails.
I mute my Twitter a couple times, so I don't have them anymore. But basically, like, Bitcoin just kind of decoupled from the stock market after a couple days, and people kind of kept talking about correlations for a while, but it just didn't care. It upgrinded, and we never ever retested those prices. Like, it just launched off afterwards. So I think it's insightful to look at correlations and when they stop working. But obviously, it's less insightful now that, it's pretty common on Twitter to, not just Twitter, but I think a lot of market participants pay attention to it now way more than a year ago.
I think in general how this works is when the market is completely broken, right? When nothing works anymore and no one has a clue where it's supposed to go, this kind of stuff works really, really well, right? Because people are desperately trying to kind of be able to predict where this is gonna go, right? And then, like, for example, in the crash back then, people were like, okay, we have no idea what this market should be doing. What I'm just gonna do is I'm just gonna copy trade like the S&P, right? And then, I mean, that works because a bunch of people are like, okay, I have no idea where this should be going, but I'm just gonna do whatever like the S&P did. And then enough people did it that it just kind of worked out, right? But at some point, the market just kind of catches its breath again, right? And then those correlations start breaking down, and then most of the time, sadly, like the newer entrants in the market, or the people that really like trade less, or like in general are less aggressive, are the ones that catch up on what's been happening for the last few days. And then they try to do it and they get completely obliterated because, I mean, the market already kind of has caught its breath again and knows where it kind of wants to go. They get fucked. Yeah.
True. I think that when some edges which tend to work, like recency is a big factor, obviously, but when things that work super well stop working, it can be insightful that something's up and tell you what not to do at the very least. I'll give you two examples. So including this one where you had basically a near perfect correlation for 3 days, and then people start talking about it and it's kind of stops working, but not just a little bit. It's like the stock market is literally limit down for 2 days in a row, and Bitcoin just starts keeps upgrinding that whole time. And you know that people who are trading this correlation without edge invalidation are probably shorting into whoever's buying. So that can be insightful to tell you that it's over for that kind of strategy. Not necessarily like you could long. I did back then. I took my shot and I just thought like something's up. But obviously, it's not always black and white. But at the very least, you need invalidation at those kind of things. And when it's that big of a like it stops working drastically, it can be insightful in my opinion. And the second example is like on the coin launch. I remember that, like we popped to 65K, and then after coin launch for like 2 days, we kind of just grinded down and stayed super heavy on top of huge derivatives bid. I think it was mostly on Binance futures. There was a bunch of layered bids that were kind of big, and in the up only, you get that kind of action. Like people gonna just eventually buy, and they don't fully fill. Market ends up running again, but that time after the coin launch for like 2 days, we just kind of grinded heavy down while open interest was skyrocketed, people paying like 30% premium, saying that coin launch is not to sell the news, etc. But in reality, like open interest was sky high, and it just didn't behave the same way that it used to behave before. And that doesn't necessarily mean that it's a good short. Again, like this time, I think it was pretty, like I did take that short, but mostly it's a danger sign that tells you that something might be up, and that kind of tells me what not to do in that sense. Because like let's say it grinds down, and when it starts popping up, instead of launching, it just grinds down again, and that goes on for 2 days and just kind of grinds down, spike up, and then grinds down again, spike up, and it keeps hitting those bids while people obviously opening positions based off of the open interest. That kind of changing market behavior can tell you to maybe not take the same bold risks that you would otherwise before that kind of change happens.
I mean, that was my exit signal, right? I've got a thread on fucking Twitter, and like I have a short-term setup that tends to work really well. Just like an intraday stupid candlestick make boing type of setup, which was working really well on the up only market. And in fact, when it did trigger, you felt really lucky because the market actually pulled back enough to let you in, and then that setup actually triggered, and then it failed completely. It just got completely crushed and sold into. And I'm like, well, shit, this is a shift in behavior, right? This setup's been working the whole way up on an intraday time frame, and now it just eats shit.
That's good because you speak of it with an invalidation in mind, but a lot of people back then they don't have that mindset. They're fucking complacent as shit, and they don't think about downside. It doesn't exist. And that's what kind of made me especially scared when I've seen kind of this shift in market behavior above the 60K is.
Yeah, I mean, for me, it's just been...
Which I guess is the same for you, Cred, with the setup not working.
That's right.
I mean, for me, it was just kind of complete and utter deja vu, or whatever, however you pronounce it, deja vu.
You got it.
Oh, let's go. First time I've ever said that word in English, I think. To like what we had in 17-18, right? Where a bunch of people were like, okay, this is where the institutions really step in, right? Like that, like it was literally the same narrative. Like at 20,000 back in the day, it was like exactly that narrative. It was like, okay, we've gone up a shitload, yes, but the institutions have not had a chance to buy. And that's why we don't have to sell 20K. And then we went to 65, and it was like, we went up a shitload, yes, but, and then it's like one-to-one, the same arguments came out, and one-to-one the same price action played out afterwards, which was it pumped into it and then couldn't maintain. And I think in this case it was even better because you could actually just look at coin, right? Like how it traded. And I mean, I can show you guys what I mean. You look at coin and look at what this did from the beginning. Now it's like literally a down only market, right? So I mean that limit, like that immediately opened and just shot to the downside and then just dumped, right? And when you
I love how 420 was like so near the top.
Yeah.
But people had Tread telling us why this is bullish.
Yeah, I mean, it's just like, it's ridiculous, right? Because the entire argument was that like a bunch of people are sitting on the sidelines trying to get in, and coin is gonna let them do that, right? If that argument is true, it has to go up after the listing, right? Because if it's not, like, there's not really that demand that everyone speaks of, and then it's obviously a sell the news event, right? So, like, I think in general, when you see these kind of like big news or big listings or whatever near points where the market is really exhausted, I mean, that's always kind of a sign to
Yeah,
look for like
that's a big
danger.
one. That's a big one, yeah.
And then, like, as you guys said, like, if you on top of that notice that the market is trading differently, I mean, that's just like the two things that you need, and then you can say, okay, I've had my fun. And I think the best thing that you said in that whole round, Salsa, is that, like, you don't have to use it to short, right? And this is something that people really don't get, is that you can get bearish signals, but you don't have to short it. You just have to, like, reduce your risk, right? You don't. There's a bunch of people that I know that only buy this market, right? Like, if you're fundamentally bullish on this thing and you think it's gonna go up, you don't actually have to short it at all. You can just, like, you can be exposed to it, maybe add some leverage at some points, and then whenever you see that the market is overheating or doing something that you don't want to be seeing, you reduce that risk, and then you pack it back on lower. And I think, like, that is one of the best kind of best ways to view the market, if you, like, because a bunch of people really can't see the market go down, right? Like, you're like, okay, I cannot believe at 60K that we're ever gonna go to 30K again. And I think that's actually fine, as long as you take advantage of these danger signs, take off risk, and then just add it lower, right? And you can still trade the same way. You can still think, okay, this market is only ever gonna go up, but you're not gonna go broke doing it, right? So I don't know. I think, like, that's one of the most powerful things. Yeah. You don't have to trade both ways. You can just trade one.
Just knowing what not to do oftentimes is, like, insanely profitable, just because otherwise you'd lose a shit ton of money, and not losing a lot of money is powerful. Like, people always think they have to do something. Like, if you see something that you really don't like and proves your idea wrong, it doesn't mean the other side is right necessarily. It's not black and white. Like,
yeah, that's where a lot of the TA kind of larping squiggly line comes in, where they'll draw a box, right? And then one arrow shows, like, if it's bullish at the box, you buy it, and then the other arrow, like, at the same box as well, if it breaks down, you short it. Doesn't make any sense. Like, conceptually, it's nice because if I'm wrong, you just flip. Well, I think that's mostly fucking fiction. I don't really know many people who consistently trade like that, because it would require two things. It would mean that no matter what level the market's at, you don't have a bias, and it would also mean that both sides of that level are just as tradable as each other and will provide you with easy invalidation and flip signals. It's just fairy tales, right?
Yeah, like, oftentimes my trades are wrong, and, like, I'll cut them even though, like, even if I cut the trade because I think it's just like, it doesn't do what I expected, or my initial idea or reason to buy is invalidated or wrong. Even if it keeps going up after I cut the long, or it keeps going down after I cut the short, it doesn't matter. And because my idea is wrong doesn't mean that the opposite is true and the price has to reverse. Like, it doesn't mean I have an opportunity to flip. It just means that idea is wrong, so you cut it.
Yeah,
and,
agreed.
And, like, people think in those kind of black and white, that market has to do something or it's going to be the other way. It's never that. It's never like that in reality.
Yeah, it's like when you start walking into, like, a forest, right, and then you get lost, and you could just say, okay, now, like, I'm just gonna, like, keep walking, but, like, the more sensible thing to do is just, like, be like, okay, stop, and just, like, say, okay, I'm gonna go back to the beginning where I kind of started, and then see if I can find my way again, right? I mean, it's just like this weird notion that you have to do something, or the market has to do something, because you have an idea of what the market should be doing, right? Like, it doesn't, like, what you think doesn't really matter, right?
And
it's just completely fiction if you think that you can kind of make the market do something, because it's never going to be that easy, right? It's just, there's few opportunities in this market where you can be reasonably sure that something is going to happen, and then you act on it. And if that's not going to happen, you don't want to be in the market, in my opinion anyway, or in that trade.
True. Like, a lot of people they evaluate their trades afterwards when they closed it, and if they make money, it was a good trade. If they lose money, it's a bad trade, and that's completely not unproductive. What's the opposite of productive? That's counterproductive, because you're basically evaluating yourself out of the outcome. But the trade idea is generated from what you know before entering. For example, when I was short at 62K, I did not even consider that, I wasn't watching the coin launch at all, right? My reasons for shorting was basically that the market was levered like crazy, and it was a complete opposite behavior than before. And I had like decently tight risk definition to take advantage of. I wasn't short, sorry, I was hedged on like December futures at the premium, and my idea was basically that if it prints a new high, I exit on like the first dip, and if it doesn't, then I not only locked a 20% premium, but I also hedge basically I sold my exposure 20% higher than the market value. And like after the trade, I could have invented a bunch of reasons of why I entered, but it was purely because the market was just heavy after the coin launch into like derivatives bids and open interest sky high. So I thought a nuke was possible and that the top was maybe in. Like I didn't know if it was in or not, but I could add a bunch of reasons explaining why I took it. For example, saying people dumping on coin launch and the chart of coin not looking strong was a confluence factors. But the truth is, I did not care about that. That was not why I entered the trade. I didn't even know what it was doing, to be honest. And a bunch of people, like, they kind of invent stories as to why a trade is a success after the fact, or why a trade goes to shit.
Good Twitter content, though, right? That's
yeah, like okay, you lost that trade. Yeah, that's because I was not on my A game. You know, I didn't drink coffee that morning, so that's why the pattern failed. No, it's just because you didn't roll the winning dice. You know, it's
I
always,
love it. It's even better when other people come in and start explaining to you why you lost your trade without knowing your trade knowledge. Like, oh, look at this random indicator. Like, it clearly want to sell. What are you doing? It's like, dude, that's not part of my system. I don't have an edge trading this fucking oscillator. Like, don't shove it down my throat. You know?
Yeah, but
if you don't know the reason someone entered a trade, trying to like convince them that they're wrong is such a fucking waste of time.
Yeah, like losing trades is totally all right. Losing money is totally all right, but you got to know why you take a fucking trade and what your invalidation is before entering that trade. That's what's important, and that's what you evaluate the trade from. The outcome, totally irrelevant.
That's a good one. Yep, I think it's a good point to round up on, actually. You know, be process oriented, not results oriented, and then results come into play if you do that for long enough. All right. Salsa, it's always fun speaking with you. Hope you had fun as well. We had a bunch of like other stuff planned in case it got boring, but it didn't, obviously, or run out of content. So always fun to talk shop, especially one of the few people who can actually trade this thing properly and not go golfing and motorcycling and all this other stuff.
I can trade
the real trader.
So far. Let's hope I keep trading it properly. Who knows?
Yeah, I mean, you'll tell us, I'm sure.
Thanks for inviting me, man. That was a cool little talk. I always appreciate talking about trading once in a while, especially when I got nothing else to do with my life.
You're always welcome. Duck, thank you for hanging out as well. Hope you haven't interrupted your late PM golf session. And the final thank you, of course, to Blockfolio for supporting Technical Roundup. We're clearly incompetent scammers as well because we have a sponsor for this live stream. So maybe just disregard everything you've listened to for the last 90 minutes. Or don't, because there are a few good bits and pieces in between. That's all from us, and I will see you on my Twitter Spaces on Monday with CMS. I'm going to ask him what the funding rates mean. That's all.
Oh, let's go. I'm going to tune in for that.
I know, right? Thanks for watching, everyone. Take care, and we'll see you next time. Bye-bye.
Bye-bye.
Peace.